to introduce our speaker, Craig Badiat from Oregon Department of Financial Regulation. Craig is a Consumer Education Engagement Coordinator for the Oregon Division of Financial Regulation. Craig grew up in Oregon City and was a business teacher at his alma mater, Oregon City High School, for 19 years. There he developed and taught a personal finance course for juniors and seniors. This experience sparked his passion for financial literacy and education. Craig brings this passion to his current role, where he helps Oregonians to develop the knowledge and skills needed to make informed financial decisions. So I think you'll really enjoy his presentation. We listened to it earlier, and even though I'm well informed, I learned quite a new things as a community member, so I was very happy to have it. So thanks, Craig.
Thanks, Jenny. Good evening, everybody. As you mentioned, my name is Craig Badiat with the Oregon Division of Financial Regulation. And my hope is that after tonight, you have a couple of actions that you can take home with you to help you be more financially resilient in the case that you suffer disaster. So look for that takeaway, that thing that you can put on your to-do list to help you be a little bit more financially prepared. We're also going to touch on the recovery side of things too. If you do suffer disaster, what can you do to maximize and speed up your recovery process? Before I get into really the content of tonight, I wanted to share a little bit about my office, because we find that a lot of Oregonians aren't aware, and there's some important resources that we offer. So again, we are the Oregon Division of Financial Regulation, and we are the state regulator for the insurance industry and then a wide variety of financial services. And I'll kind of touch on those in just a moment here. And our mission has three parts, which is to educate, regulate, and then also provide consumer assistance. And I want to just take a few moments to highlight what each of those look like so that you have a better sense of what it is that my office does. When we get into the DFR part, we're actually part of a larger state agency, which is the Oregon Department of Consumer and Business Services. And you can see that there's 4 divisions that fall under DCBS. We are a consumer protection agency and a business regulatory agency. So we have the Building Codes Division, which ensures that new construction in Oregon is safe and will withstand potentially future earthquakes. We have Oregon OSHA, of course, protecting Oregonians in their workplaces. And then the Workers' Compensation Division, which administers the state's workers' compensation regulations. We sit in the middle there as the Division of Financial Regulation, and we oversee not only the insurance industry, but also all of the different financial services that you see listed there. It's a really long list. And in case you can't see it, it includes mortgage servicers, student loan servicers, securities and the investment industry, and then even down to paying and title lenders, collection agencies. And just this year, we've added data brokers to our regulatory scope as well. Student loans was newer just a couple of years back too. So on the regulatory side, we ensure that consumers have access to fair products and services through the licensing of these individuals. And then we make sure that they are held to high standards through an investigations team that we have, as well as an enforcement team. So if it's found that, let's say, an insurance professional is committing any sort of wrongdoing, then we have the power to revoke their license and also take financial enforcement actions necessary. Okay. We also have a policy team which kind of evaluates how things are going in the marketplace and then looks to promote legislation that can better protect Oregonians. And I'm going to share a few examples of that tonight, that ways that our policy team has been at work to protect Oregonians. So that's what the regulatory side looks like. I also mentioned that our mission includes a consumer assistance portion, and that is work that is accomplished through our division's consumer advocacy team. So I am proud to work alongside, I think it's 12 consumer advocates. They work Monday through Friday from 8 to 5. And they are available to take consumer phone calls. If you have questions about any of the industries that we regulate, they're available as a resource to answer your questions. You know, if you're getting some information from, let's say, an insurance agent that just doesn't sound right, that would be a perfect reason why you would call our advocacy team. And a very important part of their work is that they field consumer complaints. So if you were to say, let's say, have a problem filing an auto claim, maybe you weren't hearing back from your adjuster for a long time, or maybe what the insurance company was offering you as a settlement you felt was unfair. Those would be reasons to call our office. You can file a complaint, and then our advocates work alongside you. They communicate with that company that you're having a dispute with, and they work to seek a resolution. Okay? And not only do they work to seek a resolution, but they also help recover money for Oregonians if the facts report the consumer. Okay, and last year we helped recover just under $9 million through that complaints process. And that's money that goes right to the consumer that filed a complaint. Okay, so that's significant. And this is, again, a free resource that we really want folks to be aware of. You can contact them by going to our website, which is dfr.oregon.gov. And you can also reach them through our toll-free number, 888-877-4894. Okay, so that's our consumer assistance service that we provide. And then my role is the education piece. I'm here tonight to share information about financial resilience in the face of disaster, but we give presentations on a range of topics. I love giving presentations on investing basics. We also do, I would actually be in Springfield on Saturday talking about scam and ID theft prevention. And we provide presentations on a range of different topics. We also put out publications with the goal that consumers can use that information and make more informed decisions when they use products and services that we regulate, right? We want consumers to make informed decisions when they are investing, when they're purchasing insurance. And tonight I'm providing that insurance education piece, okay? Lots of free materials over there at my table, and there's a QR code to access those resources on our website as well. So tonight we're here to think about and talk about how we can be more resilient in the face of disasters. And I think it's an okay place to start by just looking at the state of Oregon and understanding that we face a pretty wide range of disaster threats, right? We can look at wildfire as being one, flooding, ice storms, pretty significant ice storms over the past few years. And those natural disasters are increasing in frequency and intensity, in part due to climate change. We also know that geologists expect a significant Cascadia subduction zone earthquake in the near future, which has the potential to result in a lot of damage, right? So we're in a state where maybe we're not in Florida, or I don't know if you've heard about Midwestern storms lately, you know, and like softball-sized hail. We don't have some of those things, but you know, we face pretty significant risks still. And if we think about the financial costs that could occur if we were to be victimized by a fire, right, or flood, you know, what would it take for you to recover financially if you lost your home and all of your possessions, say, due to a wildfire? We'd probably consider that we wouldn't be able to, right, on our own. And so, of course, insurance is going to be a significant tool to use in recovery. So tonight, really, a lot of what I'm going to share is around insurance education. If we can better understand our current coverage, how we're protected now, and identify any gaps in that coverage, then we can make an action plan to get to a point where we feel that we're adequately protected to the extent that we want to be. Okay. And I want to mention here that a lot of folks have this tendency to engage in what's known as normalcy bias, that we either underestimate the likelihood that something could happen to us, or we underestimate the extent of the damage that would happen in the case that we suffered that disaster, right? We tend to say that happens to other people, you know, it's not going to happen to me. And disasters are going to happen. We have the opportunity to do something about it now, right? Prior to the disaster, the moment disaster strikes, the time to prepare has passed. And so again, today, if you could take away, you know, one or two things that you can put into action to help you really be more financially prepared, that is the goal. So these are the things that we can do to really help us. This is kind of an action plan right from the start, and then I'm going to take time to address each of them. So one of the things I'll highlight is to assess and mitigate the hazards where we live. We're going to do a little bit of thinking about our own situation and maybe what threats we might face. As I mentioned, the core message tonight is going to be around insurance education. And so assessing our own insurance that we have, and then considering how we could augment that to maybe better help ourselves. And then we'll also take a look at how to create a home inventory, putting together what you might call a financial first aid kit. And then I want to help us also understand the process post-disaster and how you can make the most out of your insurance to recover faster and more completely. So that's kind of what we're going to look at tonight. And I want to start just quickly talking about really what's not in our wheelhouse. There are agencies in the state like the Oregon State Fire Marshal's Office, Oregon Department of Emergency Management that really do an excellent job of helping Oregonians to be prepared. But one action we can take in this area, hopefully, would save us from ever having to file an insurance claim in the first place, right? That's the goal, is to avoid any sort of loss. And so can you take some time to consider those hazards around your home? Maybe you're susceptible to wildfire or landslide or flood, and then thinking about what you can do to reduce that risk, right? So it's going to be different for everybody. You know, if you're concerned about flood, then have you taken a look at your foundation? Maybe you have a basement to make sure that you have proper drainage or that sort of thing, right? If you're concerned about, let's say, trees falling onto your home, whether it be on your property or your neighbor's property, you know, that's something that you can also take some time to assess by having maybe somebody come out and look at tree health, maybe doing some trimming. And keep in mind that some of these things might be dangerous, and so to make sure that you're, you know, considering that and using professionals. But our friends at the Oregon State Fire Marshal's Office have some great information on defensible space creation. And then FEMA also has some really great resources as well. Kind of finish that thought. If you are concerned about wildfire, there's a lot of data that's being collected and studies being done to look at the effectiveness of defensible space creation and home hardening. This is from, this photo here is from the Insurance Institute for Business and Home Safety. They have a lab where they throw embers at construction and they take a look at the results. And so just, it's really interesting just to quickly look here. You can see on the left, you've got a traditionally built home with, I think it's like wood shake siding. You've got bark dust mulch in front of the home. And then on the right side, you have concrete, like hardy plank cement siding. You have gravel around the base. And you also have, I think, windows that are maybe triple pane windows. You can see the result there, right? So scientifically, in the lab, we can see that this makes a difference. I don't know if anybody saw this photo from 2023 in Lahaina. Have you seen it? they have one home that survived that fire in this neighborhood, and this home had a commercial grade steel roof, and they also had rocks around the home's foundation. What's interesting is that none of that was done to prevent wildfire. They liked the look of the steel roof, and then the rocks around the home were to prevent termites from getting into the foundation. The result was it saved their home, right? So this is anecdotal evidence, but again, if the goal is to not have to file a claim in the first place, taking that time to assess your risks and take some action can make a significant difference, right? Okay, but I've got to stick to really what it is that we do best, and that is to help folks understand insurance. And so we're going to jump into that. So the biggest takeaway really is for you to evaluate your current insurance policies and then compare that to what risks you might face and use that as a determination as to whether or not you need to make some changes to your policies. Unfortunately, the majority of homeowners are underinsured pretty significantly. CoreLogic, which is a data analyst company, does a lot of work around insurance, estimates that 60% of Americans, majority of Americans are underinsured by 20% or more. So to put that in perspective, if you had, let's say, a total loss that was $500,000 and you were 20% short, you would need an extra $100,000 to complete that recovery. And you think about what $100,000 looks like and not wanting to end up in a place where you don't fully recover, right? And that's what underinsurance can do. So we're the state, we're not trying to sell insurance. What we're trying to do is help people understand their own risk and make sure that you're making the most informed decision you can, right? Part of that is by looking at your current coverage and comparing that to your needs, okay? Best place to start is to take a look at your declarations page. We're going to take a look at an example declarations page here later on, but that's going to outline the coverage types that you have. It's going to outline the limits for each of those coverage types and your deductibles. That's the best place to start, right? Because that's your coverage in a snapshot. And then you'll use that as kind of that thing to measure against and say, hey, does this represent what it would cost to either replace my home or the possessions within it? Would that be enough? So the takeaway here is an encouragement for you to meet with your insurance agent or company and do a review once a year, and maybe not once every year, then maybe every other year. The reason for this is because it can help you to reassess your needs and then make adjustments. So maybe you're someone who purchased home insurance when you bought your home and it just renews every year. It just renews. But have you built an outbuilding shop, let's say, on your property? Have you purchased maybe antiques or tools, electronic equipment? Have you done remodeling around your home? And are those changes things that your insurance company knows about? And if they don't, they're probably not reflected in your current coverage, right? So you can imagine a lot of folks don't do that review, and that's how we find ourselves underinsured after a period of time. Okay. So this is where that conversation can really benefit you, is to, first of all, for you to say, hey, what's changed in my life that I need to communicate to my insurance agent? But your insurance agent should also do some of that uncovering for you, right? They should be curious. Done any remodeling? Have you added any outbuildings? Did you put in a deck or a pool? That information is going to be useful to them. If you identify coverage gaps, then they should present to you your options for filling those gaps. And then it's up to you to decide whether or not you want to buy that protection or assume the risk, right? That's the decision we have to make. So we'll get into looking at the different coverages within policies. First, we've received a lot of complaints around the increasing cost of insurance and the ability to get insurance. Folks are having a harder time, especially in areas of the state that are more prone to wildfire. And so I just wanted to touch on, the factors that are impacting the cost of insurance and the availability, and then also DFR's role in that. And then taking a look at the property specific things that play a role in what an insurance company charges you. So there's pretty simple factors that are playing a role in the cost of insurance and the availability of it. And one is the increasing frequency and intensity of disaster. This isn't hard to see. We can look around and see in our own communities. We hear it in the news. And insurance companies are writing bigger and more checks for folks that have losses. And as a result, they need to be bringing in more in premiums in order to cover those losses. So that's one part of it. And then we've, of course, seen inflation impact us. And that is also going to be reflected in what insurance companies need to pay out when they pay out a claim, right? It's more expensive to repair your car. That's going to increase your rates. It's more expensive to repair your home. We're going to see that same result. So in the last few years, insurance companies have paid out more in claims than they've received in premiums. And so it's not hard to see that that's not sustainable. And so as a result, we unfortunately have seen higher rates. On top of that, insurance companies are also questioning whether or not to do business in certain high-risk areas. And so they're reducing the risk exposure by not insuring properties that maybe they would have in the past. That makes sense? And that's where those high wildfire risk areas, they're saying we need to reduce our risk exposure there. We're simply not going to write any more policies in that area for a while. Okay. Or, which is interesting, they might say your home has an older roof or some other, let's say, outbuilding that doesn't seem safe. We don't want to insure you because of that risk. Okay, and I experienced that personally when an insurance company's like, ooh, we're not super happy with your roof. You either need to take the moss off of it or we're going to drop your policy within the 60-day underwriting period. And so that wouldn't have happened maybe a couple of years ago, but it's happening now because insurance companies are having to be a little bit more, have to look a little bit closer to make sure that they have a handle on that risk. Okay, what's DFR's role? So we're the state regulator, right? When insurance companies want to offer certain rates, they have to submit it to us in the form of a rating plan. Then we have a team of actuaries that examines that rating plan and determines whether or not it makes financial sense. Insurance companies cannot just increase their rates without showing the numbers for why they're doing that. Okay, and if our actuaries find something that doesn't add up, then that's where we can push back and say that this is excessive, right? It doesn't match up with your numbers that you're submitting to us. Okay, so the law states specifically that premiums must not be, and here's the law, they must not be excessive, inadequate, or unfairly discriminatory. And that is the framework with which our agency, that's what our agency can use to impact rates. So we don't have a whole lot of downward pressure, unfortunately. What's positive is that in California, they tried to put a rate increase cap of, I don't know, I think I want to say 7% or something like that. But what ended up happening is insurance companies looked at it and said, we're simply not going to be able to exist and pay those claims at those lower rates. So we're just going to leave the state entirely. And that left Californians with fewer choices when it comes to the insurance providers, right? So you saw a significant drop in the availability of insurance. So it sounded nice, but in practice, it ultimately hurt consumers. In Oregon, we still have over 100 insurance companies that write home insurance policies in the state. And you've gotten a rate increase from one of them, then our advice is to shop around to find somebody who can offer it to you at a more affordable rate. When it comes to your specific property, then there's going to be a number of factors that the insurance company uses to calculate the rate it charges. And of course, a lot of those things are going to be related to your property, right? It's going to be property specific. One is going to be the replacement cost. In other words, how much would it cost to replace your home? Consider that some homes are going to be more expensive to replace than others, so that's going to play a role. Your location, whether you're at risk for certain disasters, right? If you're on the coast, you've got tsunami risk there, right? If you're on a hillside, you've got landslide risk, okay? Your home's age and condition, of course, is going to play a role. And then you've got your construction type and fire protection. In other words, how close are you to fire services, right? All of that's going to play a role. Then you have some personal factors, right? Your credit score is going to play a role. And then your claim history. If you're somebody who files a lot of claims in the past, then that's going to affect the price that you pay. Here's something that's just kind of interesting that a lot of folks don't know is that your home has a claim history. You buy a home that was there before you were. That's factored into an insurance company's rating. Because if the home has had losses in the past, they look at it as seeing it more likely that it would happen in the future. You're kind of buying, when you buy a home, you're kind of buying its claims history. Yeah.
How would you estimate how would we estimate the replacement cost?
Yeah.
That's our insurance.
Good question. We're going to get to that, and I'll spend a couple of minutes kind of breaking down the steps you can take to determine that.
Why is credit score part of the premium?
Yeah, I think what insurance companies have done is to prove that a person's credit score is going to either negatively or positively impact your ability to, you're going to be more likely to file claims if your credit score is lower. And there have been every year in Oregon, our policy team has been involved in legislation that would remove that as a possibility. What would happen if it was removed is that the cost of insurance for everybody would go up, regardless of your credit score. Because now, if you have a higher credit score, you're now paying for somebody who has a lower credit score and might be statistically a higher risk. Okay. So I think Washington has implemented it, and I think the downside is that insurance rates have gone up on the whole. Okay. Lastly, of course, they're going to use like modeling, catastrophe modeling, to predict future losses, and that's going to play a role as well. Okay. So if you are somebody who has had a hard time finding insurance or finding affordable insurance, we put together kind of an action plan for you. And starting from number 1 to number 6, this is kind of an order of the steps you should take. So first, if you find that your rates are going up or you're not being renewed, which means that at the end of your policy, your insurance company says, we are not writing another policy for you, it's non-renewal, you should ask why. And they need to give you property specific information as to why they're not renewing you. Okay, that's part of Senate Bill 82, which was passed in 2023, which is an example of that policy work I talked about earlier, right? That they need to give you property specific information. They just can't say you're at higher risk. Why? Okay. And hopefully that information is then actionable, right? Because if they tell you it's because of your roof, then you have something you can do, right? To either maintain the roof or replace it in order to be more insurable, right? So if they're not telling you why they're not going to insure you, then give us a call. That would be a an example of why you would want to call and complain to our right? Yeah.
Real quick,
Yeah.
if the rates increase, does DFR say you can't be excessive with that increase? Or
Right, and that's where we
different category?
No, this is the law that I just showed, that rates can't be excessive. And really what that just means is our actuaries have to approve the plan as the numbers adding up. That they've showed us that we've had this much in losses. And so because of that, that ratio of losses to premiums.
I mean, is it enough for them to say, well, your home rate went up a couple hundred or 300 because your state has had a lot of disasters, even though you're not in?
Yeah. Because again, they're insuring a risk pool, right? And even though you might have done some things in your neighborhood to make you less of a risk, unfortunately, the risk is more, it's kind of, it's, you're part of this larger group, right? Yeah.
Any question? So are metal roofs more insurable than shingle roofs?
Yeah, I mean, I don't know the specifics, but I'm pretty sure that you're going to have, going to be better fire protection. Yeah. Yeah, the question was, if you have a metal roof, is that going to decrease your costs of insurance or maybe make you more insurable? And again, I'm not an agent, I never have been, but I think when you ask the agent that question, they're going to say yes, because they're looking at materials. And as you saw on the Insurance Institute for Business and Home Safety, there's a lot of data now to show that certain roof composition is going to resist fire at higher rates, right? Mesh screening is another big factor, that if you have a finer mesh screen on different vents, then that's a really significant, it reduces the risk of embers coming into your attic space and igniting your home from the inside. Thanks for those questions. By asking question number one, then it can take you to number two, which is like, what are the steps I can take to make my home more insurable? And then address those issues and then provide evidence to the insurer. And hopefully that can be used in consideration. If you have the availability to find insurance, but it's too expensive, then here's a few other actions you can take. So one is to ask about available discounts. That might be for home security systems. It might be, if you're in a high wildfire risk area, it might be having a sprinkler system. And that reduces your risk. And then you can also ask, and I don't know how effective this might be for you, but you can ask for what is called a re-rate, which is looking at your credit score again. The good news is if your credit score has gone down, it cannot be used to increase your rates. It only help you. So if your credit score went up from the time you first purchased insurance to today, then that could be a factor that brings down your rates. Okay. Next, you might look at changing your coverage levels. And this might be for folks that just they need protection, but they just can't afford what their premiums are right now. And so the options there are to decrease coverage limits, maybe on, and you can play around with those for each coverage type. So for example, your personal possessions, you can reduce that limit. It's going to expose you to a little bit more risk, but that's an option. You can also increase your deductibles. One of my colleagues is a former insurance agent, and he kind of put it this way, that by increasing your deductible, first of all, it's going to lower your premium, but second, it's going to serve as kind of a don't file a really low dollar claim tool, right? You're less likely to file a claim if your deductible is higher, which really, if you look at it, insurance is to protect us from the major losses, right? Those smaller losses we can really recover from. If we do file a low dollar claim, that might affect the affordability of insurance later on, right? So that's an option. And then probably the most effective thing you can do is to shop around. That insurance companies are not really going to be loyal to you. That by shopping around, you're going to find that that's the best way to save money. Okay, and you can do that by working with a independent agent. An independent agent's going to be able to shop around at maybe 8 to 12 different insurers. You can say, hey, these are the coverage limits that I want. Shop those coverage limits around at 3 companies so that you're comparing apples to apples. Does that make sense? If they have the same coverage limits, then you could say, okay, the premiums for this one are, $300 less. Maybe that's the reason I choose this other company. Okay. Doing that on a yearly basis is probably going to be the most cost effective. If you're somebody who just can't find coverage, then there are a couple of things that you can do. The number one step is to look into the Oregon Fair Plan. You would talk to your current agent about it and say, if you're not going to write me a policy, then I want you to look into a fair plan policy for me. It's kind of like the insurer of last resort in Oregon. And typically, hard to underwrite properties will be given a policy through the Oregon Fair Plan. The coverage typically isn't as robust, but it satisfies mortgage servicers' requirements for insurance, and it's going to offer you protection. Additionally, in addition to that, there are insurance companies that can do wraparound coverage. In other words, take the Fair Plan policy, and then you can supplement it with this additional policy to make it kind of act like a standard homeowners policy. Okay. A lot of Oregonians don't know that exists, but that is a really important resource. The last one is what's called the surplus lines market. If you've heard of Lloyd's of London, that would be an example company. And they typically would insure higher risks. It might be more expensive, but that's going to be an option. Folks that don't have an option otherwise. Okay. Again, there are 100 companies in Oregon that sell home insurance, and we have a list of those companies with their phone number on our website. Okay. So now we're going to get into the real nitty-gritty of your home insurance. And we want to start by understanding that a standard home insurance policy is going to cover certain perils. Perils is just another word for risks. And then it's going to exclude other perils. And so up here, you can see the list of perils that standard policies will cover, and then what's not typically covered, right? And the big ones there, you can see are earthquake and flood. And if you want to associate tsunami in with that, that's not covered either by a standard home policy. So again, the question you have to ask yourself is, how do I feel about this risk? And then do I want to pay what it would cost in order to be protected against that risk, right? And some folks say, they look at the cost of earthquake insurance, and they say, I'm going to assume the risk there, okay? Once you've considered this for yourself, you might want to know, well, how can I fill this gap if I wanted to? And there's a couple of options. So when it comes to earthquake and flood, you're going to have standalone insurance policies that you can purchase there, right? You can buy an earthquake policy, or you can buy a national flood insurance policy. So let me just back up there. The NFIP, the National Flood Insurance Program, is federally run. You would talk to your agent about buying an NFIP policy. Okay, so you still go through you talk to them about it. There is a website. It is floodsmart.gov, and that's where you would find more information about flood insurance. Again, there's earthquake insurance that's going to be available as well. Your flood policy will cover floods, mudslides or mud flows, and tsunamis. Okay, so that's all covered under a flood policy. Another option might be to add an endorsement to your existing policy. So you'll have to ask your insurance company about this, but it'd basically be part of your standard home policy. It would just be an add-on, and that's called an endorsement. And the third is what is called a difference in conditions policy. Difference in conditions policy. Again, you would need to ask your agent about it. Okay. Heard about a difference in conditions policy to cover me for excluded perils? Can you tell me more about that? Okay, and typically a difference in conditions policy covers the typically excluded perils. Does that make sense? Okay, so it's kind of like it adds in that additional coverage that wouldn't be covered by a standard home policy. So those are your options when it comes to those gaps. Yeah.
My insurance agent told me that the flood insurance policy also covers if there's an earthquake and there's shifting of pipes and the pipes break and cause a flood.
And cost splitting there. I'll be honest, I don't know the answer to that question, so I'm going to write that one down and ask kind of our experts there. Maybe I can follow up with an answer. Okay. But I do know that a flood policy has to do with surface water. That's the key thing. If it's not caused by surface water, that's not a flood. So we had a situation in Klamath County in Oregon where there was an upswelling of groundwater. Not covered by a flood policy.
What's surface water?
Surface water has to be on the surface of the ground that then enters your home. Okay, and this is where folks are like, are you kidding me? Right? But this is where it's written in the contract that there is specific language that outlines what a flood is. And unfortunately for the folks in Klamath County, it didn't meet the definition. Okay. But if you have concerns, that's why you need to talk with your agent to kind of get to the bottom of some of that. Okay. Thank you for that question. All right. I think we covered that. Yep. So taking a look at what our insurance covers, these are the types of coverage, the protections that we have when we buy insurance. And if you're a renter, then there's similarities, right? So the difference, of course, will be that in a homeowner's policy, you have coverage for your dwelling, the structure of your home, as well as any outbuildings. And because you're a renter, your landlord owns those things, right? And so you don't need coverage for them. Renter's insurance is very inexpensive, something like $10 to $30 a month typically. And you might, in a sense, get it for free if you have an existing auto policy and then you bundle your renter's coverage with your auto policy. The discount that you get might be enough to pay for your renter's insurance. Okay. I think a lot of folks don't consider renter's insurance. They also suffer losses and they own a lot of stuff. That's not going to be protected if you don't have that policy, right? Okay. So we're going to take a look at each of these. The one we're not going to really take a look at is liability coverage, but that would be if you have somebody that enters your property and gets hurt because of something that you should have reduced the risk for, and that would protect you. So it protects you when you're away from your house as well. If you're on a walk with your dog and your dog bites a neighbor kid or something like that, that would be covered under potentially covered under your liability coverage. Okay.
Want to say anything about umbrella insurance?
Yeah, just that's again liability protection, right? So if you are concerned that your assets might be exposed in a potential lawsuit, right, or a civil case, that an umbrella policy would go above and beyond the liability coverage within your home insurance policy, right? So if you had a $300,000 limit on your homeowner's insurance, an umbrella policy, typically $1 million of additional liability coverage there. So you'd be covered up to $1.3 million, right? And typically umbrella policies are not very expensive. You know, you might find them for under $300 a year. Okay. All right, so let's take a look at each of these because this is going to help us again to go back to our agent and start asking some questions that can help us to fine tune our coverage. And that's where we avoid the possibility of being underinsured, right? We don't want to be in a place where we have a disaster and then we understand that we didn't have the coverage we thought we did, okay? So this is where we're going to talk about each of these so that you can ask specific questions. So your dwelling coverage, of course, will help to cover any loss to your dwelling, your home. And ideally, you want the limit to be what the replacement cost would be for your home, right? That was the question. How do you determine that? But if you had a total loss, ideally you have enough, a high enough limit that that money allows you to rebuild the home that you have, right? Without any additional money, any additional money that you would need to pay into it. That's where we don't want to be underinsured by $100,000, right? So determining that, the starting point is to take the square footage of your home and just multiply that by the average cost of construction per square foot in your neighborhood. Okay, and so to do that, you might talk to a couple of contractors. What is the average cost per square foot to build a home in Eugene? And that number multiplied by your square footage is going to give you a pretty good estimate. Okay, from there, you're going to need to consider the finishes within your home and other construction methods, right? So for example, if you have hardy plank siding, that might be a factor. You might also have, let's say, surface finishes, right? Countertops, floors. If you have a wood floor, hardwood floor throughout your whole house, that's something that your insurance company is going to need to know about, right? Because otherwise, they're going to pay you what might be the standard cost to replace a floor, not the floor that you have. Talk to your agent about all of those finishes. That's going to be helpful. And especially if you've done renovations, right? If you've added onto your home or you've done a renovation, you need to make sure that your insurance company knows about that. That's reflected. Okay. Jenny mentioned earlier that you might even want to pay for an appraisal, because that's going to get you a more accurate number. And if your insurance company kind of pushes back against what you think is the replacement cost, then you have an appraisal to say, this is what somebody who's in this industry is paid to do. They're saying this should be my limit. So those are the major considerations. Inflation might be something to consider too. You should ask your agent, does my limit change over time to adjust for inflation? Okay. All right, so moving on to other structures. This will, of course, pay to replace sheds, shops, gazebos, anything that's not attached to your home. A deck might be attached to your home, it might not be. If it's attached to your home, it's going to be covered under your dwelling coverage. Okay. Typically, your other structures coverage is going to be a percentage of your dwelling limit. Everything's based off of your dwelling limit. Typically, your other structure coverage is about 10% of your dwelling coverage limit. So if we were to look back at that $500,000 dwelling limit example, 10% would be $50,000. And that's what you would have to replace any of those structures. Were you to lose them. So if you have just built a pole barn, is that reflected? Is that enough to be replaced if you had a fire and lost it? Okay. So again, that's a perfect question to ask your agent. That's your other structures coverage. Moving on to our contents coverage, or what protects our personal possessions. A couple of really important considerations there. You know what? Back up, talk about something real quick. What I forgot to mention was some optional coverages. You might want to ask, just out of curiosity, what would it cost to add these on? What are my options here? So extended replacement cost coverage would come in to play if, let's say, there was a widespread disaster, say a wildfire. If that affected many homes in the area, then you can bet that it's going to be hard to find contractors. And it's also going to be hard to find materials. And what's going to happen is that the cost to replace your home, its replacement cost, will actually be more than it would have cost otherwise. And your policy is only going to pay the limit. Okay, and so folks experienced this in the 2020 Labor Day wildfires around the Detroit area and Blue River. they had a limit, but it wasn't sufficient because of the increased cost of a contractor and materials during that time. So extended replacement cost coverage would give you a buffer above your limit that would help you to pay for those additional costs. Okay. Now you're gonna pay for that, so you've got to determine if it's worth it. Building code upgrades, if you own an older home, then you might, in the event that you have to rebuild your home, you have to meet building code standards for today. There's going to be a stated limit within your policy that your company is not going to pay any more beyond. And this would again increase that limit so that in that case, it would pay for those upgrade costs. Okay. And finally, a sewer or water backup. If, you know, in the case that you have that happening in your neighborhood where there's some sort of neighborhood-wise sewer backup and you have flooding coming out of your toilet or bath or whatever, that would increase the limit on that coverage. Okay. I mean, there's also like food spoilage add-ons. You know, there's lots of different things you can add on. You have to decide if it's, you know, if it's worth pursuing. Okay. Moving on to contents coverage. A couple things to keep in mind. One is that items like jewelry, firearms, tools, electronic equipment typically have a stated limit within your policy. That limit is pretty low, probably $1,500. So the question is, you know, if you have, let's say, a tool collection that's worth $50,000, $25,000, if your limit is only $1,500, then you're going to be on the hook for whatever goes above and beyond that. And that can be significant. The same thing goes for antiques, right? There might be a limit on those things. And so what you might need to do is have those scheduled. In other words, you would need to have that item assessed, the value of that item assessed, and then by an endorsement that would add on that coverage. Okay, so think about that in your situation. If it's a gun collection or a jewelry collection, you need to ask the question, what's the limit? And then what would it cost me to insure it if, you know, the limit is increased? Okay. One other thing to say before we move on related to your personal possessions is that your policy is going to either have what's called replacement cost coverage on it or actual cash value. It's going to be one or the other. And we're probably familiar with that, but actual cash value coverage would only pay you the depreciated value of that item at the moment it was lost. For example, if this computer is 4 years old, it's going to be worth, I don't know, we'll say $100. But is that what it would cost you to replace that item in the market? No. The actual cash value coverage would only give you what it's worth today, the moment before you lost it. Whereas replacement cost coverage, you would be asked to provide a receipt when you buy the item. And let's say it were a $700 computer. It matches the specs of the computer you have. Your insurance company will write you a check for the difference between the actual cash value and the replacement cost value. Okay. So you're going to want to know if you have actual cash value or replacement cost. I would guess that most policies have replacement cost coverage, but again, this is a situation where you don't want to find out that you had actual cash value and you're surprised by that. Okay. All right. I think that's it there. Oh, your limit on your contents coverage is typically 50% of your dwelling limit. So again, if your dwelling limit is 500,000, then your contents coverage limit might be 250,000. Okay, you can find this out by looking at the declarations page. Lastly, we have additional living expenses. This is probably the coverage type that most folks don't understand as well. But if you were to lose your home, for a total loss, it's going to take some time for you to be back in your home again, right? And so you think about the additional costs of living that you're going to need to pay for maybe a hotel for a while or maybe a rental. There might be extra food costs associated with it, right? You have to eat out instead of eating, making food at home. You might have pet boarding. You might need to rent furniture. Those costs are going to add up. Your insurance company will pay the difference between what you would typically pay, right, for your groceries or whatever, and pay those additional costs of living. Okay. There's going to be a limit again on that coverage, and there's also going to be a time limit. The folks who lost their homes in 2020, some of them were out of their homes for 2 years or longer. Typically, your time limit on additional living expenses is 1 year. You see the problem there? Okay. So again, this is where my agency, the Division of Financial Regulation, pushed forth policies so that if it's a governor declared disaster, you have a total loss, you would get 2 years to use your additional living expenses. Okay. But there's going to be a limit. And so once that limit is exhausted, then it's going to be on you, right? Typically, the ALE coverage is 20 to 30% of your dwelling limit. So again, if that dwelling limit were 500,000, you might be looking at $100,000 additional living expenses coverage. Okay. Some people had to buy an RV to live in while their homes were being rebuilt, right? And that's going to come out of that coverage. All of these can be tweaked, right? You can talk to your insurance company to reduce or raise them, with the exception of your dwelling. Like there's going to be an upper limit there. They're just not going to go above. They're going to say your home isn't worth that much, so we're not going to provide that increased limit for you. So this is what a declaration page might look like. You can see it has the policy period, which is 12 months. And then they've itemized each coverage type. You've got dwelling, other structures, personal property, loss of use, that's additional living expenses. They show the limits on each of those coverages and then the deductible associated with all those coverages. A couple of other things that are interesting. Here's your loss of use. It says up to 12 months, right? So that's stated in your policy. And then they also have a rider because they had maybe a more valuable jewelry collection and they're paying, looks like $100 to add $10,000 of coverage limit. Okay. So again, this is a tool we could use to help us assess what we have and then determine whether or not we want to make any adjustments. That kind of wraps up the insurance considerations when it comes to, is my current coverage level adequate for me? So to take this away again, here's kind of where you can start. One is to, again, review your coverage with your agent. Make sure that you have the coverage limits that you feel comfortable with. You can adjust your deductibles. You want to make sure that you have an accurate determination of your home's rebuild cost. We talked about ways that you can do that. You're going to want to take a look at any coverage gaps and then your options for filling those gaps, right? If you're concerned about flooding, then you can inquire about the National Flood Insurance Program. If you're concerned about water sewer backup, then that's something you can ask about. And then make sure you're getting quotes from multiple insurers. That helps you to compare that apples to apples. If you say, these are the coverage limits that I want, shop around at the same coverage limits between 3 different insurance companies and then see where they come in, right? Assuming that all the companies are financially sound, it should be, you can use the numbers, right, to help you make your decision. And then based on all that information, you're making changes that make sense for your family. Okay? All right, so we're going to move on to a couple of other things you can do. One of those is to build a home inventory. Can anybody show me if they've already done that? If you built your own home inventory, I mean, that could mean taking your camera out and hitting the record button. Have you done it? Okay, just a few people, kind of. A home inventory helps to identify the personal possessions in your home and to use that in order to justify any loss that you have, right? To say, well, you saw a video of my computer, I lost that thing, right? And so I want to be reimbursed for that. You open your closets, you show that you've got, you know, however many shirts. You're taking a look at, you know, you're pulling out drawers and you're capturing that information on video, and that's going to be useful again in proving your losses. To take it a step further, there are plenty of apps that you can use. Your insurance company might offer them. We are members of the National Association of Insurance Commissioners. So the state of Oregon is a member state. The NAIC has an app to create a home inventory. Okay? Your insurance company, again, might have an app, or they might give you some forms that you can use. Another option is to maybe open an Excel file or a Google Sheet and itemize it by typing in the item, when you bought it, the purchase price, and maybe any model information, if that's relevant. Okay. So the takeaway here is it could be as detailed as you want it to be, but it doesn't have to take a lot of time either. You can take 20, 30 minutes to walk around your home, hit that record button, and talk about what it is that you're identifying. Okay. You can voice over it, and that's going to be useful. Okay. It's going to help you to maximize your claim, and it's going to help to speed up your claim. Unfortunately, back in 2020, again, I'll go back to a couple of instances. There were a few insurance companies who were requiring folks that had a total loss of their home due to fire to itemize every single loss that they had. Okay. And it was incredibly frustrating and time consuming. So again, DFR, I want to say it was, well, I'm not going to say the specific House bill that it was, but it requires now insurers, in the case of a total loss, when it's a governor declared disaster again, that the insurance company has to pay 70% of your coverage limit without having to itemize anything. Lost everything. They said, this is your limit. Let's give you 70% as a starting place. Then if you want more, you can itemize the losses from there, okay? It makes you recouping that money much easier. And that's a consumer protection that we now have, right? Because of DFR policy pushing for it. So again, there's a couple of ways you could do it. If you have that data, you want to make sure you store it safely, whether in cloud storage or it's on paper, you know, off-site or in a fireproof safe or something like that. Okay. Again, this isn't really kind of our area of expertise, but it's going to help to lead into something that is. Do you have an emergency kit? Raise your hand if you have one of those at home already. More people do. That's great. So I won't spend a whole lot of time here on this, but ready.gov/kit is a perfect resource. If you have an emergency kit, you can go there and kind of check to see if what you have kind of matches up with the recommendations. Another thing that they offer is a family emergency plan tool. So if there were a disaster to strike, do you have a plan for where your family members will meet up and maybe where to shelter safely, how to access emergency contact information, right? Like emergency alerts or updates. That type of tool can be really helpful in making sure your family is safe. What a lot of folks don't consider is that putting together not only your emergency kit, but also at the same time, gather your important identifying legal and financial documents and have those ready to take with you as well. Whether again it be in the cloud, right? If you have copies, digital copies of those, or paper copies, that you might need your child's social security number to access certain benefits following a disaster, right? Or, you know, you might need to contact your utility providers to let them know that, you know, you need utility shut off or that you're evacuated. Having not only the documents, but also contact information for your financial service providers, right? Like your mortgage servicer, utility providers. So having copies of, again, legal and identifying and financial records is going to be useful. Again, you can store those in paper form, or you can have those digitally. And lastly, in this kind of same vein, having some emergency cash. That's all part of your financial first aid kit, that you would have copies of these items, that you would have the contact information and your account numbers for your service providers, and some emergency cash. Okay, yeah,
Fire safes work.
I've heard some things that don't give me a whole lot of confidence in their ability to withstand fire. I don't know if anybody else has experience with it. Again, not my area of expertise, but it's going to be better than nothing. And I don't think they're intended to withstand fire for, an extended period of time.
It's really going to depend on the type of the fire. If you have a regular structure fire and you live in the city, the fire department's going to be at your house within 10 minutes. By the time they get water going on your house, that box is probably fine unless it happens to be right in the ignition source. But when we're talking wildfire type situations where literally everything burns to the ground and cars melt, literally they're just a pool of metal, then not as likely. It really depends on the type of it. But most of us are only going, the percentage of us being in a wildfire is lower. So they're better than nothing, but also just really thinking about the placement of where you put it. If it's right in the center of the house where all the heat and all the fire is coming there, that's probably not the best place. Putting it near an exterior wall where if it does catch on fire, it's on the outside, it's going to burn, but then the fire is moving to the center of the house and continuing to go. I've actually even thought of ours. I live in the rural area and Graham and I are like, where are we going to put ours? I'm like, let's dig a hole in the, not kidding, dig a hole in the backyard, put the thing in there, put it underneath the ground with like a metal steel lid on top of it, because then A, people don't know it's there to steal it. And then 2, it's actually not within a combustible structure.
Yeah.
I have a 2-part question.
Okay.
So for emergency cash on hand, do you have a recommendation for how many days expenses or anything like that someone should keep?
Yeah, I mean, I think it's going to be personal decision. You might want to have smaller bills. Might be harder to break larger bills. But then, yeah, you could consider, depending on the severity of the event, you might be without services for a couple of days. It might be a couple of weeks. And so, it's going to be an individual determination. What if people have the ability to do, and then what they're comfortable with.
And then part 2, this was a little bit of a prompt from the online questions, but what if a big emergency disaster happens, we lose power to financial institutions to not be able to access that cash? Can you speak to that?
Yeah. So this is something that we learned specifically around, it was the Golden Fire, which happened in Klamath and Lake County, that they had some cable that melted. And so financial institutions were out of business for a couple of days, even though the structures were fine, folks couldn't access the services. So I don't know what the result of that has been, other than the Division of Financial Regulation had used that as an example for what we need to do to be better prepared to avoid that kind of problem going forward. So maybe that's something I can find out. What did we determine there? But I know specifically that was something we learned. And I know a plan has been, worked on. But thank you for that question. Okay. Yes, go for it.
Would taking a camera and snapping a picture of your dock be sufficient, or would you have to actually, would it be far better to scan it?
Yeah, I think having a scan, I think both of them are going to be sufficient. I think for me, I'm probably just going to take a photo of that. But I think if you have the capability to scan it, print it, I think that's going to probably be a little, it's going to make it a little bit easier for you.
But even if you do take a photo on your phone, have that uploaded somewhere to a cloud device. You drop this in a hot tub, you can't get out, you left the house because your life was in danger and you left your phone behind, and then everything is on there. So you really have to have, sometimes what you could do is just email things to yourself. Most of us have a Gmail account. So some of those sensitive things where they're, you know,
So that's gonna be my next question.
Yeah.
Yeah,
email them to yourself, the minimum, email it to yourself and then save that in a folder in your email account.
but you're gonna want to think about security of having those things stored in, you know, if it's an email, not super secure in sending that data. So, and that's definitely not my area of expertise, but you're gonna want to look into to make sure that where you're storing it is safe to store it. Okay. So I want to finish out by talking about what to do after disaster, right? This is part of financial recovery, is a big part of financial preparedness. And so the starting point is to make sure that you have a copy of your policy. And you're going to be able to use that again to have a conversation with your insurance company. But before you file a claim, please consider whether it makes financial sense to do that. It may be that financially filing a small dollar claim is not worth it in the long run, because that would be a claim on your record. And it could affect your ability to get insurance going forward or the affordability of that insurance. So what you can do if you're curious is you can call and you can say, I want to make an inquiry. Different than filing a claim, but an inquiry is going to say, are going to get the information to tell you, will this loss be covered? And then to what extent would filing a claim benefit you, right? The low dollar claim again, it might not make sense to file it even though it would pay out something. Because, again, in the long term, it's going to be a claim on your record, which I believe is going to be there for 5 years without dropping off. And then it might increase your premiums. So something to consider before filing that claim. And then if you do decide to file that claim, of course, you're going to want to contact your insurance company. We'll get to the adjuster part in a second, but first, they're gonna, you should ask what steps do you need to take to mitigate any further damage. So let's say that a tree fell on your roof and now you've got a gaping hole in your roof. What mitigation might look like is buying a tarp and placing that on your roof to prevent any additional rainwater from coming in. Okay, let's say that you had some windstorm or whatever blew out the window, that might be boarding up your window with plywood. Okay, so that's what mitigation looks like. If you allow additional damage to be done, that could impact your, what your claim is ultimately going to get you. Okay, make sure that you're taking pictures, right? The documentation piece, don't rely on the insurance company. Make sure that you are documenting it on your end. And you're not going to want to dispose of anything until your insurance company gives you instructions to do so, because of course they're going to need to take photos and assess the damage. So even though there might be a mess, you got to leave it until your insurance company can take a look at it. And then additionally, keep receipts. Everything from that tarp you bought, to the plywood, to meals that you ate out at restaurants, hotels that you may have needed to stay at. All of that will be used in the reimbursement for your additional living expenses, which can add up. Okay. So from there, what does the actual adjustment process look like and how would you receive payment? So following your call, your adjuster is going to be signed by your insurance company, and they might, you probably know this if you've had to file a claim, they might have a mitigation company do that adjustment for you, that assessment, or even a contractor. They may give you a choice to work with, again, somebody they recommend, or you can use a company on your own. Just consider this, if they recommend a company to do the cleanup, if there's a problem with that company, then you can take that complaint to your insurance company and say, hey, do something about this. If you use your own mitigation company, then any conflict is going to be your responsibility. Okay? You get more choice in who you work with, but consider that if there's a problem, that's going to be something that you have to deal with. When they do that assessment, they should note, the extent of the damage, the materials that were damaged, and any measurements needed to purchase materials. And then keep in mind that your adjuster isn't a contractor. So even if they kind of provide you with, hey, we think it's going to be this much, that is not the final word. That you should work with at least three contractors to get estimates that can be used to kind of justify what you expect to receive from your insurance company, right? So if your insurance company says, we think it's going to be $10,000, three contractors say, no, it's going to be $20,000. Then you're going to use that as leverage to say, no, this is the reimbursement that I'm going to expect. Okay. If for whatever reason your adjuster does not answer your questions in a timely manner, they have 21 days to reply to all inquiries by law. Oregon. If they don't do that, that's where you would call us and file a complaint. Okay. And then please try to stay organized, take excellent notes. You might have multiple adjusters throughout the process, and so you need to be that keeper of the information. If you do have a conversation with your, I think I'm getting ahead of myself a little bit here, but if you do have a conversation with your adjuster, ask them to put it in writing in an email and send a little email. Yes. Okay. Talking about payments, this can be really confusing for folks. The first payment you might receive is an advance payment for emergency money, right? They might say, here's $2,000. This hopefully will get you through the next couple of days. When it comes to your contents, they might again give you the actual cash value for the lost item, right? The $100, let's say. Then you have to submit receipts to get reimbursed for the replacement cost. Okay, so there might be a number of checks there. And when it comes to your structure, if you have a mortgage, the lien holder's name is going to be on that check as well, right? They have a stake in the repairs being done to your home. They're gonna want to make sure that your home has been repaired because it's their investment too. Okay. Oh, I did want to mention that we have this excellent post-disaster claims guide back there, and it's just a great resource. If you need to file a claim, there it is. It's got that step-by-step process in there. Okay. I kind of addressed some of these things. Let's see. Depending on the severity of the loss, then your settlement timeframe might be significant, right? We talked about like a 2-year process for people in 2020. Please do not feel rushed or pressured to agree on a settlement amount. If you have any questions about that, please take your time. And as I mentioned, keep organized and ask for communication writing. When disaster happens, when anything is new in a community, there are going to be folks that take advantage of that confusion. And so, unfortunately, not only are we, victimized by the disaster, but then folks will come and try to take advantage of that confusion. We do have a really good disaster scam guide. It's available. I don't know that I put it on the table, so I will grab some of those. But this was in collaboration with the Oregon Department of Justice, as well as the Construction Contractors Board and DFR. So it has a little bit of information from all of those state agencies. And then lastly, again, if you have a problem with that claim, give us a call. That's why we're here, to answer questions. If you're feeling that the insurance company is not honoring their contract with you, we want to know about it. Unless consumers call us and file a complaint, we can't know that there's bad actors, right? We need to get that information. So if any of these things happen, please give us a call. Skip that. And then resources and links, just a couple of resources that might be helpful. This one's related to earthquakes. Cascadia Region Earthquake Work Group is a really great organization. This is for the National Flood Insurance Program. The National Fire Protection Association, they help organize, have you heard of Firewise communities? Okay, they're the organization that supports that effort. And then the Oregon Department of Emergency Management has a lot of great resources too. And then my office has a Prepare Now page with disaster-specific information for floods, for wildfires, for storms, and information on how to create that home inventory. So that's another good resource. And I think that brings me to the end of the presentation. If you want to follow us on social media, we put out a lot of financial education resources, not only disaster specific, but for example, we just published commercial insurance guides. So if you're a business owner, how do you protect your own business, right? And so we published 5 commercial insurance guides, and we helped promote that through our social media. And contact information can be found on our consumer advocacy brochure, which is on the table over there. And then finally, if you feel inclined as to give me a little bit of feedback, we always appreciate that. And I'll open up for questions. If any folks have questions, I'd be happy to answer those.
Good.
I have some kind of complicated situations that I've dealt with my insurance. One is related to requirement, trying to get a discount for seismic retrofit that was pretty a significant barrier. I basically couldn't apply with that I was able. And then another is just the questions around going with the National Flood Insurance Program versus surplus lines like Neptune. And I'm wondering if the consumer line might help me understand if the consumer line may help me with either of those.
With, I'm sorry, either
Either of those issues that I'm dealing with.
Yeah.
Like the Neptune.
Right.
There is requirements for discount.
Sure. This might be a situation where you call our advocates because they, yeah, even for a question like that is perfect for them because they have the experience in the industry, whereas I don't. And
Yeah, sorry. That's what I was wondering. If they would be a good, the consumer, I was calling it the
Yeah.
consumer line, but if that's, yeah.
Yeah, that's it. Again, they're not just to help you file complaints, they're there to answer questions too. Right? So, and this is again, a state agency. It's a free resource that we're paying for through taxes. Actually, we're not part of the general budget because we bring in enough money to pay our own bills. To our licensing and enforcement actions, we're kind of self-funded. So. Yes.
This is probably a different presentation, but I'm interested in doing a solar power thing. Partly for disaster. Does EWEB have resources for that? I know they do, so I'm just asking a question so you can tell me about them.
I have to rely on the comps team because I'm still fairly new with EWEB.
Okay.
You can take down your email address and reach out to you with what programs we have available.
Oh, I could have done that. I'll remember that next time.
Anybody else?
Any questions online? Nope, okay.
Well, I'll be happy to stick around for a little bit, answer any questions you have. I'm gonna get those disaster scam guides, get those on the table. Feel free to stop by if you haven't yet. And thanks everybody for coming tonight. Appreciate it.
Thank you from EWEB in the City of Eugene. We hope that this was helpful to you as part of your family and individual disaster preparedness. We will make sure that the presentation that we're recording is available and accessible, but you can go to their website. And if you go to the toolkit on their page, this presentation is there. So you can use that if you need to reflect back on some of the information that Craig was able to provide to us. So thanks everyone for coming. And we're going to do the door prize for the folks that are in the room.